Your take first on the jobs number. What do you make of the U.S. economy now looking at 4.4% unemployment?
So it's interesting the way you phrased it. And thanks, Matt, for having me on. I think the U.S. economy is doing fine. I actually think U.S. economy, I was just looking at the numbers before coming down here. I think we're going to grow 2.5% to 3% first quarter growth. The economy and employment are quite different conditions today. We have a productivity revolution. We talk about it. Yeah, people were encouraged last month. You had 137,000 jobs last month, but 130,000 were in healthcare. You strip out healthcare, we have no hiring. So I looked at the next 9 months. If you strip out healthcare, the last 9 months, total jobs in the country is negative 358,000. Negative 358,000. Stripping out healthcare. We're going to keep hiring healthcare workers, even though today this number was a little bit softer. Again, last month was really strong. We're going to still hire healthcare workers because the population's aging. We looked at a metric, people 65 and above. We haven't even kept up with that rate of growth. A friend of mine was showing me that. So we're going to keep hiring healthcare. The problem is we're not hiring other people because there's productivity going on. And it's not AI hasn't really kicked in yet, but productivity. I mean, you see this. I read tons of earnings reports. You look at what companies are doing. Run your business more efficiently, keep your top line in a reasonable position, and get your cost infrastructure down. So point being, I think, by the way, economy's fine, and then, but it's just, for the people dynamic, it's harder, and it's part of why I believe you need to have more policy to help impact that.
It's interesting, Rick, I've been doing this for 25 years plus, and we always say the markets are not the economy, because there can be times when the people on Main Street are feeling pain and equity indexes are doing just fine. But what you're saying now is that jobs are not the economy, which is a little bit more concerning for those on Main Street.
I have a strong view that, there's a problem in that, what people describe as a K-shaped economy. I think we have a problem today in what are particularly routine-oriented jobs, low income, is having a really tough time today. The aggregate economy, because you actually got part of the economy, you got CapEx, and certainly data center infrastructure, et cetera. CapEx is in very solid shape. And then you got consumption that's being held up because you have a cohort that's actually still doing well, which is older, higher income. But we have what is a continuing and even a growing bifurcation that I think, and by the way, I think some of the initiatives you heard from the administration on affordability, things of that ilk will help. Listen, I think the Fed, I know we've talked about it before, you have a near-term dynamic around energy shock, a supply shock. I still think the Fed, I think we still have to get the mortgage rate down in this country to get labor mobility moving, to get housing moving. And so I think there's some initiatives to try and stabilize what, quite frankly, is a bit of a concerning dynamic today.